So a treasury company is a company either with an operating business or no operating business, whatever, but it is a company whose business, they make it their business to raise capital and purchase Bitcoin. So the underlying value, the biggest part of the underlying value of most of these companies is the Bitcoin that they hold. I mean, some of them have operating business, Saylor does too, but the operating business is trivial now compared to the size of the Bitcoin he owns. So in theory, if you had a publicly traded vehicle that owned a Bitcoin, it should trade at the value of the Bitcoin or slightly above or slightly below, either a premium or a discount, all else being equal. However, what they've done and what they're able to do and what Saylor really has pioneered is the notion that, when you have an operating company or when you have a company with a Bitcoin that owns Bitcoin, you can actually borrow against that Bitcoin. You can use some leverage and either sell debt or sell convertible debt or sell preferred stock. And as he recently said in his earnings call, I think he thinks with the preferred stock he's found his iPhone moment, which is to say he found the killer thing that everyone's going to want. And you can go out and you can issue a security to the marketplace that basically raises capital, and you use that capital to buy more Bitcoin. And in the case of the preferred, let's take a vanilla one and just round the numbers up. He'll sell a straight preferred stock. It's secured by all the Bitcoin on the balance sheet. It's ahead of the common in any kind of a liquidation event. And it pays a 10% dividend. Now, he doesn't have the cash to pay the dividend, but he can either sell more preferred or sell common in order to pay the dividend. And, what he's betting is that the Bitcoin that he buys will go up more than 10% a year, which if you look historically and you look going forward, that's a relatively safe bet. And so what you've done with a treasury company, most of your treasury companies, what they're doing is they're leveraging Bitcoin. And so because of that leverage, their performance will track Bitcoin because they have it on their balance sheet. But the leverage means that they will exceed Bitcoin's return because they own more Bitcoin, and they're using it's what Harold Stennis, or I think it was Harold Stennis, Hugo Stennis, a guy in the Weimar Germany did. He borrowed money in Weimar Deutschmarks, and he used it to buy stuff. And then when the Deutschmark became worthless, he had plenty of money to pay back the lenders, and he owned all the stuff. And so what these companies are really doing, that's how simple it is. What these companies are doing is they're borrowing money in some form, debt, convertible debt, preferred, and the preferred never has to be paid back, by the way, it's perpetual, but and they're using it to buy an asset that they think will go up faster and more quickly than in value than whatever the cost of that capital is. And, as long as they don't go too far overboard, get too much debt and get too out there, this will work. And as long as the return on Bitcoin exceeds whatever that capital cost is, they will be, quote unquote, adding value to their shareholders. Now, it gets a little trickier because they're inventing all these new metrics on how to look at these things. They have something called MNAV, which is the multiple of the NAV. So in any one of these companies, you can look at all the, you look at the market, common stock price, the debt, and the preferred, add it all together, and that's the market value of the company. And then you compare that to the underlying Bitcoin. And of course, they all sell at a premium to the underlying Bitcoin because people think that they will continue to execute the strategy, and the return will be higher than just owning Bitcoin. So it should be at a premium. The question is how much premium? And, if they're small, growing really rapidly, we've seen a couple of them come out and the premiums have gotten to MNAVs of 4, 7, 8, 10, 12, 15. I mean, crazy numbers, but pretty much because they're just getting started and they can add a lot of Bitcoin. And in turn, the flywheel here is that if you have an MNAV of 12 or 10 or 5 or even 4, you can sell new common stock into the market, use the proceeds of that sale to buy Bitcoin, and you've actually increased your Bitcoin per share. So it's anti-dilutive. And so people are saying because of that anti-dilutive quality, we should encourage people, these companies, to sell common stock or other forms of, securities into the market and buy Bitcoin. And so, they're right. I mean, it does make sense. In a bear market where, Bitcoin goes down and maybe these MNAVs collapse, they won't be able to grow. They'll have to stop that. And arguably, if they have preferred dividends and they can't sell common, they can't sell more preferred, they'll have to sell some Bitcoin just to pay the dividends. But I think what they're betting is that, and what they've said is that they think that the leverage, as long as they keep the leverage, in what they call intelligent leverage, which is 10, 20, 30%, never more. And as long as they build their models where they stress test them so that if Bitcoin were to have one of these big corrections, down 50, 60%, they would still be covered and able to make all their commitments. That this is a strategy which will produce a higher rate of return than just owning Bitcoin. But, like everything else, you add leverage, you add volatility. So, they're going to go up faster. They're going to go down faster too. So, but I'm in favor of it because it's another demand for Bitcoin. And what they're doing, and Saylor points this out, this is his iPhone moment. It's kind of brilliant. Your average boomer, for example, has a lot of money saved. And they're out there looking for a return. And, frankly, it's pretty hard to get a 10% return with a low level of risk today. There aren't a lot of stocks paying a 10% dividend. They're just, getting 10% is hard, right? And yet, he'll sell you a preferred stock that yields 10% perpetually, forever on your cost basis. And, he'll take the proceeds and put them in Bitcoin. And the way he's getting the 10% is he's thinking the Bitcoin is going up more than 10%. And so he's willing to do it. And so you, Mr. Boomer, don't realize it, but you've just supported Bitcoin, even though all you really wanted was a 10% rate of return safely. And you've gotten it. And so what that's doing is it's just sucking capital out of all these, out of all the rest of the market, right? And as you and I both know, this is one of the things that makes me, when people say, well, we're too early here, or, we're too late here, I say, no, you're not. There's $900 trillion of wealth, fiat wealth. That's including real estate. So take real estate away. Call it $450 trillion of fiat wealth out there. Stocks, bonds, cash, securities, right? Bitcoin's total market cap today is $2 trillion, a little over it now. Well, 2 over 450, it's still a pretty small percentage. And so more and more of that 450 is in, and when that 450 realizes that this is something that can't be diluted, and this is something that's going up forever, Laura, they're going to migrate and say, well, yeah, maybe I shouldn't hold these bonds. Maybe I should hold this Bitcoin. Or, maybe it's not, I sell my bonds, but maybe I buy this strike preferred and get a 10% yield. That's interesting. And people say, well, that's risky. You're betting on Bitcoin. No, you're not. You're at the top of the capital structure, and that preferred is covered, like 10x. The top one, and I don't think it yields 10% now. It yields less, but you've got a lot of Bitcoin underneath it. And so that Bitcoin, even if that Bitcoin collapsed in value by 70%, it would still be a big number relative to your preferred. And that preferred gets the first dollar out of that company. So, that's pretty low risk, right? And so, it's kind of a genius move. And, some have called it, and I agree with this, some have called it a speculative attack on fiat currency. And it really kind of is, in a backdoor sort of way. And it's amazing to me. I went to Harvard Business School, and they just did a case on it. I saw it on Twitter. Somebody was talking about it, and all the people were criticizing me. So, do you realize this guy has taken this company from like a $3 billion market cap to a $100 billion market cap in like 5 years? Nobody in the history has ever done that. It's stunning what's going on here, and people aren't paying attention to it. And I'm like, I got this thing. I got my IRA loaded up with this thing, right? It's like, no, because seriously, this is going to be one of the most valuable companies in the world. Saylor's going to be the richest man in the world, in my opinion. And not that far out. Probably 5 years out, maybe 10 years out. So it's really quite an amazing thing. Now, below Saylor, there are all these other guys, and we own some in the fund. I'm involved with the Bitcoin Opportunity Fund, and I'm a big fan of a lot of them, but not every one of them is going to make it. There will be some guys who will get too leveraged. There's some guys who won't do it as well. In my view, Saylor and his organization, they are really they're really pros, and they're the biggest and the best. And so to me, it's an easy call to own a lot of that. I think the others might outperform him for brief periods of time as they're growing, and when they're getting adoption and so forth. But they're all untested. And he's been doing this for 5 years, and he rode out a bear market, and this guy gets it. So to me, MicroStrategy really stands head and shoulders above the alternatives.
If you're ready for your next piece of education, go click on this video here. However, if you're ready to take action on all the education you have seen, then go to our links right below. Get your hardware wallet from Foundation, $10 off. Go get your seed phrase from that wallet and put it into titanium from Stampseed, 15% off. And then go to the Bitcoin Way, check them out, because they are going to be the team to walk you through everything.